Welcome, Mish. How are you doing? Today, I thought we would talk about Apple, the topic of your daily today, and maybe a few other topics that are just underperforming. So, how was your weekend, and what are you thinking?
Great to see you, Jeff. Weekend was pretty good, actually. Season in Santa Fe, right? Weather's gorgeous, except right now you might be hearing some booms behind me. We're having an unusual thunderstorm. But as far as the Apple trade, really started to interest me because I always liked looking at underdog stocks, and it's very hard to imagine that we're thinking of Apple as an underdog. But the reason why I wrote my daily about this particular stock is because if you looked at the Q chart compared to this, the Qs are just about at all-time highs. And this thing is really still in a bearish phase. Yep, there you go. I mean, look, we're just a sniffle away from those highs
Yeah,
that we had in January. So it's interesting that Apple would fall so out of favor. I mean, it's Apple, right? I mean, I can't believe it. I mean, here's my Apple iPhone. I wouldn't use any other Apple CarPlay. Now I can't live without it. You know, so much of Apple has been infused in our lives. So I found this curious. And then, of course, we don't get into the host of reasons, but costs have been the biggest prohibitive factor for Apple right now. Everything is just more expensive. A lot of their stuff is made in China, as we know. That's what's hitting them. But as we're talking, they're having a big conference. So they're talking about the liquid glass shield on their phones and a whole bunch of other stuff, improving AI, all of that. So is that going to make a difference? Can we write them off, considering how innovative they have been through the years? Well, what's great about what you and I do is that we don't have to worry about that question fundamentally. We just have to see what the price is doing. So look at how it's dancing on that 50-day moving average, right? It's
yeah.
like just dancing on it, which means if it clears like the 50 and also, let's say, 206 as a level, I think that would be a really good start. Especially if you look at the real motion indicator down below, we're seeing a
Yeah,
little bit of a bullish divergence in that the dots are above the 50. So that's
yeah.
already
Just kind of getting
gone,
there.
right? That's gone into a recuperation phase, even though we haven't been able to in price. And as you and I know very well and relay to people all the time, momentum can precede price, but you need the price confirmation. And you can see how badly it's been underperforming the SPY. So let's look at that 206 level. 206, I get interested. Obviously, there's a lot of resistance up above at the 200 and the 6-month calendar range low around
Right.
225. But that would be a good risk reward because I probably would not want to be in it under 200 if it breaks
Yeah.
out. So you got a $6 risk. And basically, if it can go, you got close to a $20 move up. So that's not a bad risk reward for a short-term pop, and then you reevaluate.
Yeah, it's amazing to think that the you used to look at the cues and know the direction they're going to go based on the direction of Apple, and that clearly is history.
And that's the beauty of the markets is that these die-hard rules that people will live by and continue to live by, they don't realize that these rules shift all the time. This was a major one, right? People say if Apple's doing well, the market's doing well.
So what do you think about here's the weekly chart. Here's,
Yeah.
the 200's a big level.
I don't
Um,
like the weekly chart as much, or at least I don't see the potential as much as I saw on the daily. If you look at the real motion, we kind of had
oh yeah, real motion looks
it's
terrible.
just terrible. A little oversold, but that's the best we can say for it. And it's a bearish diversion as well at that, because look, the 50 weeks under the 200 week on the actual price chart, the 50 is above the 200 week. It
Yeah.
held the 200 week on its last dip in April, and it hasn't even been near the 200 week this year on the real motion.
Yeah. That I didn't notice this wedge when I was looking at the daily. That's pretty interesting. I mean, clearly it is in the daily, but I'm not one who runs around looking for these, but that is pretty compressed right at that 200 level. So I
Yeah.
don't know which way it goes, but
Well,
that's
if it
enough
breaks
time
down under
going nowhere.
200, yeah, I don't think you can be bullish. If anything, I think you can pretty much think that it'll go back down at least to the 200-day or 200-week in this
200
case.
week.
And maybe if it breaks that, we'll see 150 in this stock. At some point it will be a good buy, but right now it's leaning more on the negative than the positive. So again, if it starts to pop out, I might think of it more as a short-term play than any kind of major investment.
Right. All right. Well, let's another area of the market that you have talked about. I talked about it in the Outlook this week is gold, not gold, crude oil,
Yeah.
energy. And so this perspective, if we want to talk about underperformance as a starting point, let's look at the weekly, and then we'll come back to the daily. Um, this has spent a lot of time going nowhere. Well, I shouldn't say that. I mean, up here, this is $90 and we got down to $60. So, and the weekly chart doesn't look like much, but uh, that is a pretty big move. If I go back to the daily, um, what do you think of crude oil here?
Well, I'm very pleased to say that we put the fund in it, looking at USO at around 69.90, just under 70. So they're making some money in there right now, which is great. And the reason why was just the classic, Geoff, the simplest rule that's in my book that we've been following for years, which is it had a confirmed phase change 2 days close over that 50-day moving average. Even though it was a weak phase change in that the slope on that 50 is still negative, as you can see, I felt that this was something that was A, overly shorted, B, the worst news of it was over. OPEC plus meeting happened, that was it. Didn't have a negative impact like people thought. And C, I was reading more and more and more about the rig counts going down 6 weeks in a row. Producers are just not going to produce cheap oil. They don't want to. It doesn't make any sense for them. So that, all of that, but really it was the technical, just follow the rule. 2 days above the 50, breaks
Hmm.
down under the 50, you're gone. So literally had like a $2 risk in that. Now, of course, we've gone to a no loss stop, following the rules on this one to the letter. I love that trend line you just drew in, by the way. That's a valid trend line. So that's,
Yeah, I didn't know that was there.
yeah. So there you go. So like it's underperforming, but yet at the same time, if you look at the real motion, that cleared the 200 in momentum. We haven't quite cleared it yet, which right now means the momentum is in its favor. Look how it started to outperform the SPY in
Yeah.
the last couple of days. And we're right into resistance here. $62 a barrel is where it broke out from, corresponded with the 50-day in USO. 64 to me was a major breakout. And of course, now we're looking at 67 would be the corresponding price per barrel to the 200 that we're seeing here. So we're getting right into close to resistance. So we'll see what happens.
Yeah, you're talking when you say 67, you're talking the futures, right?
Correct.
Yeah. All right. So sticking with the energy idea, we talked about this a couple weeks, actually probably 6 weeks ago, natural gas. Um, Whoops.
You're going to look it on.
Yeah, yeah.
Okay.
My fingers weren't working.
So,
Um,
so let's use the same theory, right? So if oil producers do not want to produce oil when it's so cheap, so they hedge in the futures market, right? Which is the whole reason why the futures market got started. They cut back on their production. It's simple supply and demand. The price goes back up, and at some point, they may turn the spigots back on. Then why isn't natural gas doing the same? So natural gas is the #1 energy source in the United States, by the way. I was kind of surprised to find that out. Not really, but a little bit surprised. So if the natural gas producers, they're getting like $3.60, by the way, if you look at the futures in natural gas, that's pretty darn cheap for something that is the highest use of energy. If you were a producer, would you do what the oil producers have done here in the US? Would you say, you know what? No more fracking. But we don't have to know the answer to that question. All we have to do is look at the chart. So yeah, right now this thing has been holding the 6-month calendar range low, so that's to its credit.
Yeah,
It's above and beyond, above, back and forth on the 200-day moving average,
right. The green one.
the green one. And now you have the 50 coming into play. If you look at the futures price, because I always look at the underlying in these commodities, right? Because these
Yeah, that's a good, that's, I like to do that too. I don't know the symbol on stock charts, do
NG,
you?
G. I don't know if it's on stock charts. I go to bar chart, but NG is the symbol. Nope, that's Novo Gold. So yeah,
Yeah.
that's why I just look at that Novo Gold chart. Interesting. But that's the whole reason why I go to bar charts because I get the pure futures price, and yeah, and I also have a free subscription there. So that's the other reason.
That helps.
But anyway, let's go back to UNG.
Yeah, sorry. I'm trying to get rid of that line.
So the thing to remember here is the 380 level in the futures. If it gets through 380, that will correspond with what you're seeing as the 50-day moving average here, which comes in around 1750. But we're not really seeing any signs of that yet because the momentum is, well, actually the momentum is doing a little bit better than the price, right? Look at the momentum, it's a little scrunched up. But if you look at the momentum, it looks like it's trying to get over the 200, closer to it anyway, unless I'm not seeing it well. No, the red dot went down today.
Yeah, I mean, I think it's so close.
Right. So you want to watch the momentum get over the 200, ideally over the 50. That would be improving momentum. You know, you want to see it at least not start grossly underperforming SPY. Obviously, you can see it's underperforming. You want to see cash go over 380, and you want to see this just like we talked about oil, two closes over the 50. Simple.
Yeah. All right, so there's one other area. Well, you know what? You brought up the 6-month calendar range. That's worth noting. If you look at the red line here, that's the January low, and then just compare that to USO, which it broke in January, sorry, broke in February and sold off hard, rallied back up to it, sold off hard. So they've both been weak, but crude much weaker relative to the beginning of the year.
Right. Exactly.
Um, let's take a look at solar.
Okay, so the other thing, and the reason why I know all this stuff about energy right now is that I'm getting ready to do a radio show interviewing P&M, which is kind of like the East Coast Con Ed here in the Southwest, talking about their future plans for energy. And they're really looking at going more clean energy, which is interesting because New Mexico makes its money mostly from oil and gas, but that's beside the point. What I was really surprised to find out was that solar energy and wind energy are number 2 and 3 in terms of energy sources in the United States. It took a little bit of a hit, although in April everything took a hit, but it took a little bit of hit on that gap down after the announcements of the big beautiful bills talked about getting rid of the credits for solar. But it's gotten really cheap. That's the word that I'm hearing now, is that solar energy has really come down in cost. So those credits may not make a difference. The point is, if it's the second energy source behind natural gas and oil prices start to go up and natural gas prices go up, you know darn well this will go up too. So that's why it's on my radar. Look at the momentum. The momentum is definitely in a bullish divergence. I think that's really interesting. And like, look at that 50, Geoff. Looks like it's getting closer there to 200. You might get some kind of golden cross in momentum.
Yeah, I mean, the dots are way over the 200 and they are not here in the price. So that's divergence number one. And we're definitely going to get a divergence with the moving averages before we get it here. And so I think we'll see that if we look at clean energy, the power of that.
Right, but before you leave this chart, what's so
I
interesting
will.
is had you waited for the two closes over the 50, you would have been in before that big move up to the 100. And even on that gap down, if you had basically a no loss stop or a stop underneath the low of the day it pierced the 50, you'd still be in it. So you'd be
Yeah.
catching kind of a second time. Now you need to see the two closes over the 200. And then
Yeah, and if we get the two closes over the 200 with this divergence and this bad news gap down, that does seem like something that should stick.
exactly. And also look at your calendar range there too. You're back
Yeah,
above the 6 month low, but you're coming in to the 6 month calendar range high, which this has not been above. If you go back to the July one, the previous 6 months, we have not been above that 6 month calendar range high. And probably even before that, it looks like, oh my God, look at that.
yeah.
We have
This thing's
not,
been it's been stepping down for a long time.
yeah, so that would be a major reversal. And of course, just goes to show you that you should never pay attention to politics because just could be that solar energy plays big in spite of what you think the administrative policies might be.
Yeah, wow, that's a great observation. Since beginning
2023.
of 2023, this has not spent any time over 6 month range or over the 200, really. I mean, just here momentarily.
Right.
Of course,
That
it hasn't yet either. So we
right.
are being a little forward thinking.
But that's okay.
Yeah.
To me, it's better to know now and put it on your radar. And those of you who look at stocks at the end of the day and ETFs, just stick that as one to look at and just keep your eye out for that. Because believe me, if that happens, you will be one of the first people to be in that position. And then, of course, when it starts going up and up and up, you'll start to hear more conversation about it. That's what I love, is to be the first in, not the last in.
Right.
Yeah.
All right. PBW.
Yeah, well, this is more general clean energy. Also, though, I mean, compared to the market, underperforming. But look at that real motion again. Oh my God, it's just like really sweet.
Yeah. This
And
one's over the 200 now.
yeah, and this is just got over today. So if we follow the rule of what we just said about tan, there's one little factor there, of course, and that would be the 6 month calendar range low. I'd
Yeah.
probably want to see that clear too. But this is another one that not only has not been above the 6 month calendar range high in almost a year, but it's spent most of 2023 and now most of 2025 under the 6 month calendar range low.
Yeah. And you got that round number at 20 that so you have a lot of stuff coming together right here.
Yeah, look at that little speak in leadership today at
Yeah,
Apple.
yeah, I was just gonna say the same thing. Let me get my zoom in for us. So, I mean, this is interesting. This is saying that it's outperforming the market here, even though it is way down in its base. So that tells you this has been a pretty strong move. And actually, relative to the last to this base, that looks a lot better than the SPY's
Yeah,
humble attempt to rally.
yeah, so that's great. So hopefully we left you with some ideas. Apple, natural gas, oil, and now solar and clean energy.
Yeah, and I would say most importantly, the focus on energy, they're all doing the same thing. They're all rallying in the short or intermediate term. So that's always interesting. And they do travel together. If you look at USO, that peaked in the first 2 weeks of January too. It bottomed in April, as a lot of stuff did. So they
Well,
do
along with
pretty
the
good job.
tech. So, there is a correlation because you cannot have data centers and AI without energy. You just can't do it. I mean, uranium, of course, has been on its own fumes, probably a little bit premature, though, before it actually has its use in doing powering AI in data centers. I know there was a big deal made last week with, was it Microsoft?
Facebook,
Oh, yeah, Meta, of course.
Facebook,
Yeah,
right,
Meta.
Facebook,
So there you go.
Meta.
It's the future, but we still need all hands on deck for right now. And that's what we're seeing, which is a good sign for the economy until, of course, it gets to the point where it might be inflationary, but we don't have to worry about that just yet.
Right. All right. Well, that's a lot for people to chew on, but the same topic, so it shouldn't be too hard. And we'll see.
Okay.
All right. Thank you, Mish.
Thank you, Geoff.
Talk to you soon.
Bye.